So, many of you have been asking me about this new withholding tax announcement by the US IRS, and I'm sure most of you have probably seen it via email or through your brokerage app if you have one. So, what is this withholding tax, and does it affect your current investments in the US stocks and ETFs? Don't worry, I'll break all of them down for you in this video. But first, disclaimer ahead, I'm not a financial or tax advisor. Whatever I'm presenting in this video is based on my online research only. Please consult a qualified professional if you intend to seek professional advice. Alright, let's get back to it. In case you didn't know, effective from 1st January 2023, the US IRS just announced new regulations under Section 1446F regarding publicly traded partnership (PTP) securities held by foreign persons, individuals or entities. That means you and I, all of us living outside of the US, are directly affected by this new regulation. And the keyword here is PTP, publicly traded partnerships, which means they are partnerships traded on stock exchanges, and typically they are shares like infrastructure funds, property funds, commodity funds, currencies, etc. I'll leave the link to the full list of affected PTPs down below for you. So for those of you investors like me, our favorite ETFs like S&P 500, Nasdaq 100, etc. are not affected. So technically that's all for this video. You can now close this video and enjoy the rest of your day, but please don't do that before leaving me a like button. Thank you so much. I'll miss you. See you again. So now, if you ever own any PTP shares and you choose to sell them, your broker, for example Interactive Brokers or TD Ameritrade or Momo or whatever that is, will withhold 10% of your gross sales proceeds or distribution proceeds. Or in other words, whatever amount you sold, you will only get 90% of that back, or whatever dividend you receive, you will also only get 90% of it. Here's an example. Assuming you bought 200 shares at $50 per share, that means you are paying 200 times 50 equals to $10,000 worth of initial investment, right? Then few days later, the share price went up to say $51 per share and you want to sell all of them. So you sell 200 shares times $51 per share, and by right, you should get back $10,200, right? Well, not until this new 10% withholding tax comes in and it applies to your final sales proceeds, which is the $10,200. So effectively, $1,020 goes to the US IRS, while you only get back $10,200 minus $1,020, which is $9,180 only. Yes, I know, this is huge and it's a lot of money. And on top of that, in case you are not aware yet, this new PTP withholding tax is separate from the existing 37% withholding tax for individuals and 21% withholding tax for institutions for the dividends paid by any US PTP securities. I'll list down a few helpful articles down below in case you want to read more, but if you ask me, this US PTP is as uninvestable as it gets. I don't think any sane person or investor would be keen to touch them with a 10-foot pole, unless you're a trader. So bottom line, this new withholding tax doesn't affect your mainstream S&P 500, Nasdaq 100 ETFs, etc. The current 10% dividend withholding tax and US estate tax still applies, but if you have no idea what that means, feel free to check out this video where I have explained it in detail. That's all from me. Thanks for watching, and I'll see you in the next one.